Hi, it's Nero here, buyer's agent and founder of Investment Rise, and welcome to another monthly update. Today, I want to go through what's happening to our various capital city markets and then offer 3 reasons as to why what so many people expected to happen to our property market isn't actually transpiring and what that means for you as a property investor. So let's get started by first looking at the data. So as you can see on the screen here, I've got CoreLogic RP Data daily home value index, but I've got the monthly values here, okay? And if you've been following me for a while, you'll notice I've got something a little different here. What I've got here is the data as at the end of October, so 31st of October 2022, and next to it, I've got the data for the 30th of September 2022. So I'm comparing what's been happening on a month-by-month basis. And this is really going to give us some very good insights, because let's have a look at Sydney. In October, according to CoreLogic data, for all dwellings, prices dropped 1.3%. But compare that to in September, where prices dropped 1.8%. Okay, now 1.3 to 1.8, you might think that's pretty similar, but if you actually look at it from a percentage perspective, 1.8% is about 35% higher than 1.3%. Okay, so what does that mean? It shows that the rate of decline of property prices in Sydney has slowed by 35% in October versus September. Okay, let's look at Melbourne. In Melbourne, house prices declined by 0.8% in October, but in September it was much higher, 1.1%. Okay, Brisbane, including the Gold Coast, 1.9% fall in October. September, 1.7%. Roughly, I would say that's going to stay consistent. Okay, Adelaide, prices dropped 0.3% in October. 0.2% in September, so again, roughly consistent. And for Perth, property prices declined, and the rate of decline, though, did slow. So it's 0.2% in October, but 0.4% in September. So that was a 50% reduction in the pace of the decline. So now you might be wondering, well, Nero, why does that matter? It still shows that property prices seem to be declining based on that data. And sure, you're right, on an aggregate level, many areas are still declining. But when you're trying to work out, well, what does the future hold for property prices? And especially if you're trying to work out, well, when is this overall decline going to end? You want to look at the pace of the change of property prices. And it's clear from the data that I showed you that the rate of decline is starting to slow, especially in our bigger markets, okay? And this really matters because if we go back to say what happened during the COVID period, okay? Now, many of us will know that property prices shot up. Yes, they did. But I was one of the few who came back out in October of 2020 and said, look, the property boom is going to start right now. And how could I be so accurate at that time? It was because I was doing exactly what I just shared with you. I was tracking property prices, I was tracking the direction, but I was also tracking the rate of which property prices were either declining or increasing. Obviously, at the time, property prices were declining, but it was very clear that the rate of decline was slowing month on month, okay? And very quickly, we hit to October, where we had almost zero decline, and prices shot up afterwards, okay? And something very similar could happen here. Now, of course, there are other variables. The situation is different right now, okay? But when you consider the fact that the Reserve Bank of Australia is starting to slow its hiking cycles, interest rate hiking cycle, okay? We're now looking at 0.25%, okay? And if you look at the recent statement from the RBA governor, there is a lot of optimism there in terms of we could be reaching the end of the current rate hiking cycle, okay? But apart from all that, let me share, I think, 3 reasons why I do believe that the property decline on a macro basis is starting to slow, okay? Now, again, there are different markets out there that are performing very well. Many of our clients have bought in markets that have defied the downturn in the last few months, okay? And they're getting capital growth and they're getting some extremely strong rental returns. But here I'm just talking about the macro market, the overall market, what's going on, and why is the rate of decline starting to slow? Why is a market not crashing like what people expected and the media headlines we spoke about just a couple of months ago? Hi, it's Nero here, and I'm sorry to interrupt. I just wanted to take a quick minute to ask, are you enjoying this video? If you are, would you mind then hitting the like button? And if you want more content like this, please hit the subscribe button and the notification bell so that you don't miss out on any future videos, because I aim to release 1 to 2 videos every single week. Now, let's get back to the video. All right, well, first of all, sentiment is changing, okay? People are starting to see that, well, those doomsday predictions, they were overstated. I mean, I'm starting to see it myself from a business perspective. In the last sort of 2 to 3 weeks, we've had a number of very smart investors reach out to us and sign up for our buyer's agency service because they understand that there are opportunities available right now. They understand that there are many people who are waiting on the sidelines, who are making their property investing decisions based on media headlines. And if you've been following me for any length of time, you'll know I often say that media headlines are great clickbait, but they're pretty bad property investing advice, okay? And it's not just buyers who are scared, but it's also sellers who are worried about what's going on in the media. Oh, is the property market going to crash? If I need to sell, I need to sell quickly. And they're willing to negotiate in many areas, okay? So there are definitely signs that the sentiment is changing. More buyers are entering the market, especially a lot of property investors are entering the market because number one, they understand there are markets out there that are defying the trend and are rising right now, month on month. But secondly, they also understand there are some great opportunities to get a really good deal, buy now, and then take advantage of the next growth phase in these particular markets. Number two, housing is a basic human need, right? We all need to have a roof over our heads. And so people who want to buy or feel they need to buy, there's only so long they can wait before they have to enter the market and they have to buy for whatever pressures they're feeling, okay? And right now we know that supply doesn't come anywhere near the level of demand. And this is made worse by the fact that the government has opened up the floodgates for migration. I'm not saying that increasing migration is a bad thing, but what I am saying is that the housing market won't be able to handle the influx of migrants coming from overseas, okay? And then when you hear statistics like Master Builders Australia CEO Denita Warren, who said, we need to build 200,000 homes each year for the next 10 years. So that's 2 million homes in the next 10 years to meet the existing and predicted demand. And we're nowhere near that. And I went through this in a bit of detail in a previous episode. But the fact is that demand is so much higher than supply that is going to stay that way in many markets around the country. And so even some price wobbles that we're seeing right now, they're very short term. We're seeing some research come out of University of New South Wales and UTS in Sydney showing that this current situation of the market will simply be remembered as a slight correction, a slight wobble in times to come. And number three, those predictions of people not being able to afford their mortgages as interest rates rose and there were going to be all these increased fire sales, well, that just has not transpired. Now, of course, there will be a small number of people who will not be able to afford the higher repayments, especially people who leverage themselves to the hilt at the start. And unfortunately, I think that's going to be a lot of first home buyers who took advantage of various government incentives to get their own home, which was great. But they end up leveraging themselves to the max, and now they're going to be in a situation where they're going to have to sell. So you are going to see a small number of people, but the fact is most people are ahead on their mortgages, and only a small number of people will have to fire sell. I mean, we're seeing this from the banks themselves. In fact, let's have a look at what ANZ CEO had to say. ANZ boss confident most customers can handle higher interest rates. The vast bulk of ANZ customers will be able to tackle even higher interest rate rises, with the bank's chief executive confident that mortgage stress will be an issue for only a tiny cohort of borrowers. The article then goes on to say, Elliott, who's the ANZ CEO, Shane Elliott, said it was hard to predict where rates will go. But 70% of ANZ's 1 million home loans customers are ahead on their repayments and have the capacity to deal with more rises. I believe that if rates go up, the vast bulk of customers absolutely will be able to keep up. Why? Because their pay is also rising fast, they're ahead on their repayment, they have the biggest buffers on average they've ever had, he said. I'm not delusional. I'm not suggesting there won't be stress. I'm not suggesting some people won't get into difficulty, but it's a relatively small cohort. And that seems to be the message that's being echoed by all the bank CEOs. And so I think if you're planning on waiting for all these fire sales to appear and all these people defaulting on their mortgage, you're going to be sorely disappointed. You're going to miss out an opportunity. And I think more and more people are starting to realize that. They're starting to look for property. Buying activity is starting to increase in many markets around the country. So what does all of this mean for you as a property investor? It simply means that you do not want to make your property investing decisions based on media headlines, media hype. Instead, you want to base your decisions on data, and you want to understand that right now we have 3 types of property markets in Australia. Number 1, certain markets are struggling. Number 2, certain markets are flat and they don't look like they're going to grow anytime soon. And then number 3, you've got certain markets, certain suburbs, which is where you invest in certain suburbs that are actually rising right now or set to begin their next growth phase, and there are opportunities for you. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.